Hey, good morning. Welcome to the morning brief. Today is Thursday, September 11th. So what do we got on the docket today from forexfactory.com calendar? You can see at 8:30, actually, 8:30 it started to see the core CPI month over month was 0.3% as expected. CPI month over month, includes everything, is zero point 0.4 versus zero point 0.3. So inflation is still here. And it's ongoing. CPI year over year was 2.9, which is expected as 2.9. This is higher than the previous of 2.7. So yeah, CPI prices are going up. Unemployment claims were higher than expected at 263K versus 235K. What else we got going on? So this is, good for interest rates, bad for the market. So there you go. 10:30, we have natural gas storage. 1:01 p.m., the 30-year bond auction. 2 p.m., we have federal budget balance. That is it for this Thursday. So moving on, looking at the daily chart here, you can see we are continuing to march higher, even though there's bad news everywhere. Continue to march higher. Don't know what's going on here. Drawn a new trend line across the top here. So maybe we'll have some resistance around 65.70. A downside, probably the high volume node right there at 64.80. Volume was slightly better than average. Not a lot to write home about, but new closing high yesterday. Looking at the inventory. So inventory was down. So price action up, inventory down. So this is the second day in a row we've had negative inventory on positive price action. This is a red flag. This lends me to believe that the smart money is starting to get out. They're selling into this price action to the move to the upside, maybe moving to the sidelines as the market is extraordinarily frothy. Technical term there. So this is screaming caution. Looking at the overnight action, you can see the giant move from the CPI number. We've now recovered all of that back. Of course, we're going to shrug off the bad news and just keep going up because that's what we do. Yeah. So bad news initially goes down. Oh, everything's fantastic because the Fed's going to lower interest rates. Doesn't matter that we're going into recession. So you can see how sometimes the market completely ignores the obvious. That being said, hey, trade what you see, not what you think. I know I would be a much, much better trader if I would just trade what I see on the screens instead of trying to put a bias or an opinion on. So there you go. There's your tip of the day. Where do we have support and resistance? Well, we're in nosebleed area up here, so got nothing. Literally got nothing. There's a Fibonacci extension, a 65.63, the old intraday high 65.65, another Fibonacci extension at 65.88. So there you go. On the downside, where's support? There's definitely some support here around 65.36, 65.22, 65.10-ish. Of course, the 6,500 is a major area. We get below that, it starts getting ugly. 64.94, 64.80 is really kind of a line in the sand. 64.80. Below that, really ugly. 64.60, not worth going down below that. So there you have it. Support and resistance for today. Stock Trader's Almanac is 76.2. A 76.2% chance the market will be up from the Stock Trader's Almanac. That is really a high percentage. So historics are certainly pointing to the upside. Overnight action in the overnight here was 27 points. That's above average. Not a ton, but above average anyway. And that shows that volatility is also here. So hope you have a great day, and we'll see you tomorrow. Happy trading. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com.